hello to you. Is something that I want to make it clear. Last lesson we talked about the bank reconciliation statement, and under this topic, Alana should be able to understand things, which is very important for you to do well in your exams. Now, bank reconciliation statement. This is a statement that is being done when there's a difference between uh, the balance in the cash book and the balance in the passbook or the bank statement, or the bank statement. If there's any difference between them, that's why the accountant has to do bank reconciliation statement. Now there's some different format that I want to show you. Now these formats can make it very easy. Now the first format, now for you to make it well and understandable, sometimes there's some question maybe you'll be asked to do adjusted cash book before you make your bank reconciliation statement. You will be required to start with the adjusted cash book. Now, to adjust a cash book, you're writing things that maybe you as accountant never recorded, but the bank recorded. Now, you are trying to see what kind of transaction that you failed to record, but the bank recorded. Now, for example, of those things that maybe you, as a customer, accountant, you can forget to record, like stamp orders, like bank interests, like credit transfer, debt transfer, okay, credit transfer. Now those are the things maybe you can fail to record as an accountant, but the bank can record dividend and so on. So for you to make sure you adjust your cash book, you're supposed to know which transaction or which kind of thing that you failed to record. Then after transacting everything that you failed to record, you'll get the balance as per adjusted cash book. Then you'll take that balance as per the adjusted cash book. You'll add unpresented checks, and the unpresented checks, these are checks that you offered, but it failed to reach the bank. Maybe you gave your customer a check, or the suppliers I mean, but they failed to present that check at the right time. So unpresented checks, these are checks that you as a business owner, you gave to the suppliers, but the suppliers failed to record. You realize now, under the unpresented checks, under your cash book, you see the money decreases, but the bank, it is increased because you have given the check, but the check never presented. Then we have something called uncredited checks. Now, uncredited checks, these are checks that the customer gave it to the bank, but the bank manager failed to credit to your account. So those are what we call uncredited checks. Now, customers gave out that, but the bank failed to credit those uncredited checks. So if you want to start with the balance as per the adjusted cash book, you'll be required to add the unpresented checks, then you less uncredited checks, then you'll get the balance as per the pass book or balance as per the bank statement. Now there's some different formats, and there's another format when you'll be given, for example, balance as per the pass book or balance as per the bank statement. You'll see the format change. you have started with adding the credit checks, but if the balance is as per the bank statement, you start with adding the uncredited checks, then you less unpresented checks. So it is just a recap of what we learned last class, and I have tried to at least to show you where to correct and where you're supposed to understand it. Let us meet the next session so that we can proceed with the bank reconciliation statement part 3. Thank you very much and have a nice time.